Welcome back, folks. Dow is up 12. S&P is totally flat. Let's go to one of our gold miners, a real gold nugget, and that is Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you doing this afternoon?
Pretty good, Steve. I see that a lot of the gold mining stocks, the GDX and NUGT, have been pulling back. And do you think it's a good time to get back in?
Well, so the GDX is pulling back. 28 million shares right now. 44 cents is what it's down. Not all the mining stocks. You've got ABX, which is one of the top 5 inside the GDX. That's trading up. And Agnico Eagle, one of the other stronger stocks, trading up just slightly, both up 29 and 39 cents respectively. Specifically, you're looking at NUGT, right? But you would make that decision based on what the GDX is doing. Kind of help me out here.
Yes. In fact, what I've been doing is I've been trading NUGT and GDX, and I got out of a lot of them the other day, and some of it I'm still kind of holding in the GDX, and I was thinking about getting back in. So,
okay.
Yes, you can focus on the GDX.
Okay. We'll help 3 of our other listeners that have sent emails, so that's a good thing. With regard to GDX specifically, is today a good day to get in? It's as good as any. If we just take a look at our TAS market profiles, what we can see is that this is traded back to the point of control level, which is 23.51. That's a potential buy area, as well as the price level of about 23.05 to 23.12. So, that would be the price range that you would be looking for. Today's volume, let's go take a look at that. 28 million shares to the downside. Going against 78-ish type million to the upside, 80 million to the upside. So certainly this is pulling back on light volume. The question becomes, where is it that you want to go ahead and, poke your head here? What you don't want to see, and your stop, you would want to have your stop on the other side of the low of October 11th. That would be one potential stop. That's at price point of 22.50. Now, the reason, but ask me a question if you have one in your mind.
Well, I would like to see possibly like a. It's hard for me because I'm doing this at work. I work a full-time job and I get to check everything during my breaks. But a lot of times, what I'll do is on my break, I'll go ahead and I'll pop up, let's say like the GDX, and I have access to a 30-minute chart, and I'm would like to see a bullish candlestick, and it would be more of a confirmation that would be the time. But sometimes it's hard, it's hard because working full time. So sometimes also what I'll do is I'll put a buy order in at a good area of support and, see if it hits while I'm working and then check it.
No, absolutely. Yeah. Absolutely. That's the way to look at it. Now, with regard to the GDX, the bullish candle that formed out here that you were looking for actually took place at 12 noon. So that was a bull sash candle. Here, let me put this on the screen so that other people can see too. No reason to keep that private. So price was moving lower, doing it with less relative energy. That the move down here to 11:30 actually had a bit of energy. So that pattern didn't form out here. With regard to any other pattern, let me just do a wave count on the way down, see where we're at out here. That's the wrong way. I need to go to the downside, not the upside. Just so happens on your 30-minute chart that on the same session, the session prior to your bull sash was a seventh wave move, wave number G out there. So I think, Mike, that all the things that you would be looking for, and folks, this was not pre-planned or anything. It's just Mike saying, hey, I like to look at the 30-minute chart, and he looks for certain patterns out here, and we just pull up the 30-minute chart, and it has those patterns that each of us would like to trade out here. So you've got that. The other thing that you've got that I'll share with you is right now, and this is a chart for gold. We're looking at a line chart. That means we're looking at closes out here. And gold has been very sneaky. I noticed this late last night. And gold has been very sneaky. It doesn't want anybody to know that it's actually making higher lows and higher highs on a closing basis. You see, if I would go ahead and do this here and put it to our normal candle view, it's disguised. And I'll show you what I mean out here. It's a little bit disguised. You can still see, rising prices, but I just like to take a look at the closing price, and it's doing all of this, Mike, in the face of this guy being the king. Not Arnie Palmer, but U.S. dollar index. So the U.S. dollar index, which has been moving, has done absolutely nada to both gold and silver. Doesn't mean that it won't. I'm going to take the stance that it won't. It's not. So I'm not going to fear the king out here. And, of course, I would ask you not to fear it as well. Just make sure you have a stop in place. So
right.
the 30 – go ahead.
Yeah, I'd like to bring up something else, too, that I was kind of aware of. Andy Heck brought up the other day, I think last Thursday. He was pretty much saying with the dollar going up the way it has been, and he thought that if gold didn't get smoked bad Friday, that might be a good indication that, hey, gold is really holding its price, and it's in a sense showing relative strength against something that would normally make it tank.
I'm not going to argue with Andy Heck out there, the commodity king. So I agree, by the way. I think that is really what the charts are communicating to you and I. As both you and I know, anything can happen out here. But,
right.
Hey, with regard to a 30-minute chart, you couldn't get a better trade setup. And actually now your stop, in essence, would be somewhere just below today's low. Because you get below that seventh wave, it suggests that it might pull back further. But I do think the numbers that I gave you on the GDX with regard to their daily support levels, those market profiles, those are the ones to be looking at. So don't go all in hog heaven. This certainly can pull back into that 2305 and 2312 level. And if it's on light volume and gold and silver are still in this small uptrend, that's your real buy area. Okay?
Thank you very much, Steve.
Hey, thank you for calling. Thanks for pointing out the 30-minute chart. I'm sure that our listeners are jumping all over that. All right, Mike?
Okay, great. And, like I said, it's just something that I've been doing because, again, I work a full-time job and I only get a couple times a day to check everything. So I kind of developed my own little system of, like I explained, like sometimes I'll put a buy order at support and,
Sure.
I can't watch and everything, and then look for what's happening on the 30-minute because it just gives me a closer, time frame. So
no, absolutely. Now, the one thing what you're looking for, the other side of the trade. Here, I'll give you the so-called bearish side of the trade. Because if we change the way that we look at things, and the things that we look at will change. Think about that for a minute, folks. But the level of resistance out here is this 1278.50 area. So from the bullish side. For the mining equities, we certainly want to see that area get taken out, and then 1289, and then it should be off to the races. So I think there are subtle hints that suggest that is what gold wants to do. Andy gave you one, and gold has given us another. All right, take care, Mike, and have a great day at work.
Okay, thanks, Steve. Bye.
All right. Folks, that was Mike in Ormond Beach. Call lines are open. Dow's up 5, S&P back 1. We'll be right back.